Yeah, and I'm worried the kind of punishment that the stock markets are giving to bad earnings, whether Metro will be the victim of that or not today, because clearly they deserve a bit of that. Definitely, it was an all-round miss coming in. Yes, the revenue was up around 6%, but it was 9% lower versus the consensus estimates. Even if you look at the margin performance, that also declined. The margin this time declined almost 300 basis points year on year, came in at 31%, and the overall EBITDA declined by 3%, resulting in a 70 basis point miss when it comes to the expectations of some of the analysts. As a result, no surprise then that the profitability was a huge miss. The adjusted profit came in at around 97 crores, which is a decline of 13% and a miss of 17% on the bottom line. So that's the kind of underperformance that we have seen from Metro Brands this time. And of course, it was that negative, operating leverage that was working its way to the profit of the company. They have, shut down some of the Fila stores as well. The Gravitex loss is around 8 crore rupees. And the e-commerce sales also came down quite a bit, and the company said that there are some issues in transitioning to new order management and warehouse management, and that's the reason we saw all of this. But the P multiple of the stock is not cheap at all, over 60 times. I wonder how the street will react.
You know what amazes me is that how can things change in a quarter so much? I mean, it's not that Indians are not buying new shoes. It's not that brand has changed. It's not that there was something negative which happened in terms of a brand recall. But what has changed in between quarter, which was supposed to be a good quarter? I mean, the initial numbers which we got for hotel, tourism, travel, for everything you do, which is outdoor, you need a shoe. So I'm just amazed that what changes.
The bigger worry is that Metro is one of those specific stories which cuts across the bands,
Exactly.
right? It's got a rural as well as urban exposure. So what was challenging for them? Because right now we've been talking about the K-shaped recovery, urban consumption at a high. Is this a precursor, or is there a sign of things to come for urban consumption? Is a story?
It might well, Aisha. I mean, you're absolutely right. I mean, you look at, markets always move in extremes. Sometimes it's price, sometimes it's opinion. The opinion is that luxury will keep on doing well, rural will never recover. That's the theorem which the markets are working with. And I think with Metro shoes, that in a sense becomes the near-term challenge, because expectations are high, valuations are high, and the near-term miss, what Anisha said, is absolutely right, that markets are in no mood to give you a year. They are just punishing the stock. They're selling the stock and then they're understanding. In numbers,
what went wrong?
Exactly.
Yeah, but even some of these end-of-season sales, the data indicates that it was very muted this time around. So I don't know if there's an overall change.
We're talking in one of the edit meetings that, look, online urban retail is slowing down. There is evidence which you're getting, let's say, from the Flipkarts and the Amazons and the Mishos of the world, that, look, there is a slowdown which has started coming in. And this is something which I don't think markets are prepared for. See, the hangover, which I call the Santa Riley hangover, I think is getting over. It extended itself from December to the first week of Jan. Now reality is coming back.